Hello, welcome to Ageia Services Strategy-Based Trading Review. Today we're going to go over a bull trend. Markets that are in a bull trend are simply making higher move highs, higher move lows. That's the definition of a bull trend. We've got a positive bias, good volatility, good momentum in this market state. As long as the market is holding higher move high, higher move low structure, further gains should be expected. This doesn't mean we can't see corrective setbacks, but we'd expect the negative price action to exhaust above that lower inflection point that would maintain the structure. The structure we're going to look at for the bull trend is when the R level is below the downside pivot, so it creates this band. So we're getting this kind of a support band. So the R level is going to identify that lower trough. So really the second structure break, and the downside pivot, the DP, is going to identify that first structure break. So this whole zone becomes a support band. If we're in a bull trend and if we have the R level below structure, below the downside pivot, the optimal strategy themes are to buy a break off the R level, so to fade momentum into the R level. We could see the market take out the downside pivot, so that's why we recommend a buy DP reversals off the DP. But the idea is that we're anticipating the positive momentum to build and the bull trend to engage. This is the leverage area where we would expect the most liquidity, but we're looking for this attribute of higher move highs, higher move lows to permeate through the session, and we want to get on that bull trend train with the biggest leverage applied at the R level or within this 3013.5 to 3009 even level in the 10-year Treasury notes. On the hedge strategy, if we get a breakout above the upside pivot with 131 even and the market can't hold that breakout, we would execute a sell UP reversal. And then if we get a failure from the directional, which is our midpoint of the critical range, that would give us another sell signal, and that would target the R level. So taking a look at the trading session for the 10-year, 5-minute chart here, and we're always looking at the market structure. So here's the upside pivot, downside pivot, the R level is below the market. Here's midnight. I'm going to put on our market metrics. So here's our variance level, our alert distance. And so we can see it as the market opened up the night before. We have the market opening up below the directional. We don't get a push into the downside pivot area, into this sweet spot for buying. But then as we come into the overnight session, the European opening, the market is breaking out above the directional. So the key to this market state is we have markets in a bull trend with sentiment below the market. We're anticipating this market to perform like a bull trend. We're always watching price action within market structure. So just as you're watching a market looking for higher move highs, higher move lows, we're also looking for it to climb the market structure staircase. So climb the price map ladder. And when the market moves above the directional, it's a big signal for a trending market, because that tells us that if the market's good, it's going to maintain a trade above this directional. And if it doesn't, that's telling us that today's not going to be the day it's going to trend. Maybe it's going to be one of these corrective days, and we're going to have a play back down to the support level, back down to sentiment. If we would make a play here for sentiment, it would be a much stronger signal. We would expect a real powerful bounce out of this area. And then when the market can't get to that level, it's also a sign of strength. So it's always keep clear vision, where's sentiment, watching price action within market structure. So as the market's breaking out here, there's real clarity that the market's strong and it wants to go higher. And then we just take a look back, what's that last low? And we mark that. I'm going to throw our minor levels on here. So this is our minor structure. So we can, as we're watching the market move overnight, we're coming into the regular session opening, and we have the market below the averages here. When you're looking at price action, you're using indicators and market structure. Market structure is the trump. So market structure is the key variable that you want to always keep an eye on. Is the market holding market structure? Are they holding the price map structure? So here we breach this level. It should stay above here. That's our first structure break, and this is our second structure break. And then we can see the second structure break has confluence with price on that metric. So we're still holding positive structure, market structure, and we can look at our price action where the market's making a high here, and we have these lows. That's a first structure price break, and then you could see these lows here as a second structure price break. So when everything gets in confluence, it's nice, especially if the averages are in confluence as well. And there's no real magic number on the averages, but it's just kind of a good guide. You don't want to lean on them too much. Again, it's just a good visual guide, and it's nice when at this point, the market is not only is it back, taking out this price structure that was that market structure, but now you're also above the averages, so you kind of get a fresh signal. So when you're here, the market's telling you it wants to go higher. The foundation is bull trend. You have high confidence that this market's at least making a play to the upside pivot. So this is our, at least we're having trade vision here. They don't give us an entry back down to this level, but they do give us an entry here. How can you get on this train? And you're just anticipating this market to make higher move highs, higher move lows. We're not coming in here saying, okay, well, we missed this buy opportunity, so we're going to fade against the upside pivot just because we're here. No, we're looking back. Is the market holding positive price structure? Is it holding positive market structure? Are we above our averages? And those are all yes. That's all pointing to the market wants to go higher. And then we can look at what's our expectation. This is a buy DIR breakout. It's not part of our optimal playbook strategy, but it is part of this theme, so we can engage in that. And if we get in a breakout signal is worth 2 APMDs, 2 average price map distances, so that's from the directional up to the UT1. And so the market pays out, and it holds structure the whole day. The 5-year was in a similar position, so we're going to take a look at the 5-year. Same thing, R level below the downside pivot, we have that pocket. We would expect this market to perform similar to the 10-year, and it does. It's always nice to have confluence with the similar markets. You can use that as a guide. Put the minor levels up here, kind of same squeeze play here, same violation, and the market just continues to work positive price structure and positive market structure. This is a strategy-based trading approach, and so we're looking at currently a trending market, trend type market, and these are positive trends with upside, UPT, uptrend. It's our bull trend market state, and we have our R level structure-wise below the DP. Well, if we flip that, we can look at a trending market to the downside, so a bear trend. And we have a bear trend, and a similar condition is going to be when the structure is above the upside pivot. So we have kind of a mirror of the bull trend as a bear trend. So now we have this resistance pocket. If we're in a bear trend, if sentiment is above the upside pivot and forming this band, then these are our strategy themes. Just to reverse, we're sell our fade against the R level, and we're going to execute a sell UP reversal. If we get that opportunity, but this is the theme that we're anticipating, the market to build negative structure, lower move lows, lower move highs. And if we get that false breakout to the downside, we'd anticipate a buy reversal that we could then press above the directional, targeting the R level. So let's take a look at the Euro stocks. So here's our structure. We've got our R level at 28.92. Here's our upside pivot, the directional, downside pivot at 28.12. Market opens up. I'm going to put our market metrics around here. And so we have a market that's opening up in the early part of the session. That first hour can be a little squirrely on the Eurex products for some reason. Something to to remember. And we have a market that comes above the upside pivot but can't make a play for this resistance band. We're always focused on the facts. And what do we know about any trading above the directional here? This is corrective because it's a rally against sentiment. So market is negative below here. This is our optimal sell area. And so when the market tries to make a push, it tries to build a base and it can't, and it fails here. This is a negative signal. It's a fresh negative signal. telling us that the market is engaging in this negative momentum, this negative optimal strategy theme. We're just looking to participate in the themes. What theme is in play? This is a trigger that the bear trend is re-engaging. I'm going to put our minor levels up here so we can watch the price action within the market structure. So we have a failure here on our structure. We get a test of our support pivot. It's natural for us to get a bounce on a test of the downside pivot. We get that, but we have the market here breaking price structure but holding market structure. So if this is our theme, our bear trend theme, lower move lows, lower move highs, we're looking for this to play out intraday. So we take this peak as we're here and we're coming into this level. We're looking at our price action structure. Here's our swings. And so this is our first price structure point. We could argue that this area here, if we micro it in a little bit, would be our second structure point, which lines up with this metric. And so that's important. So they hold here. We understand we have our backdrop. We know we're in a bear trend. The market's pressing here. And as it starts to fail and starts to move underneath our moving averages, it gives us another opportunity to get on this negative momentum. Here we get a new signal. Market comes into our metric variance and provides us another sell opportunity here. And when we're getting into an opportunity here, we're always looking for a full APMD, so the downside pivot down to the DT1. Even as a rule of thumb, using half APMD and then a full APMD. Here you have the market getting excited, breaking price structure 1, price structure 2, so they hold that. They continue to hold it here, and they ultimately follow through obtaining a full 2 APMD move. So it's always good to look at where's this move originate. So if we're looking at a strategy theme, we're in this theme. What's the big signal? The big failure signal is here, because that's telling us that the market is moving through that midpoint of that critical range, and that bear trend should engage, because if it gets back above here, it's going to be corrective and it's going to start to negate this energy, this negative energy. So it doesn't. And so from here we're looking for 2 APMDs, 1, 2. Market pays out. Another market that's in the same condition is copper. So we have copper is in a bear trend market state. Every market that's in the same state and structure, we're going to anticipate to have the same attributes. Structure is the same, R level above the UP, and the strategy is the same. Now on the structure part with the market color, it's going to be a little different, and so you can see the different nuances between the copper and the Euro stocks. Euro stock was kind of more orderly break, and we don't have the same profile. Versus copper, you have some little nuances where the market got a little extended, but it does have good follow-through potential. So those just a little more granularity, a little more detail. But in general, it's the same strategy, optimal strategy themes and hedge strategy themes. So copper, here's our structure points, our R level above the market. Here's our upside pivot, our directional, our downside pivot. And a similar situation in copper where we have this sweet spot up here for where the big sellers are. We're looking to sell this. Market opens up above the directional, so maybe we're going to get a play into that sweet spot to really leverage up on a sell opportunity to get back into, potentially be the peak of this, top of this corrective move to get in here. These are the choice opportunities. They don't happen that often, so when they do, you have to leverage up. And so here, the market starts to be corrective and it fails. And then we have this emotional break. So here's a full APMD quickly. And then the market breaks below the downside pivot. So we're fully engaging in this theme. This is why I like to use the simple moving averages, because it really just keeps your focus and clarity on what's happening instead of thinking, oh, the market's overdone. No, the market's holding aggressive negative structure, and it's in a bear trend. It's in this bear trend theme, and we get a downside breakout, and we breach the metric, and it gives us multiple opportunities to participate within this zone. Again, keeping your signal acceptance in this alert distance zone is key. I'm going to put the variance on here. And you can see how this variance came into play. So alert distance, variance. This is really your sweet spot for entry all the time. It's rare that you get these opportunities here. And sometimes when you get these opportunities here or even here, it's a tell. that it may not be the big move. This is a big move. This is ideal. This is kind of an ideal situation where you have a downside pivot breakout and the market just goes and pays out 2 full APMDs. From this failure here, which is a trigger that engaged, confirmed that we're in this bear trend optimal strategy theme, we paid out 3 full APMDs quickly. And so that's what you're always looking for, this textbook. And this is textbook right here for a downside pivot breakout. And then a quick attainment of this target. And we expect a reaction. And this failure here is a sign of weakness. And so we're getting this squeeze here. And I'm going to dial into this on this price action just a little tighter. And let's take a look at the minor levels. And so we're always watching price action within market structure. And so we can see the market violent break. We're just watching this, we're anticipating a bear trend, lower move lows, lower move highs. Real simple. Just keep it simple. But we're looking at the same thing on structure-wise, so it's stair-stepping the price map. So we have price structure and market structure trumps. Market structure is the main determinant. And so that can help you when you're getting squeezed. You can definitely use your position management, but if you get dinked out, you can always get back in. So as long as you're holding market structure, re-enter. So here you have the market working bear trend, holding this price structure here. Now you get a failure. Now you're working this top of this market structure. Again, you can see how it starts to work the metrics. And even if you're a short-term trader and you see situations like this where the market's holding this metric here, well, it's negative. Maybe we're going to play for this level. Maybe we're going to play for here. With a downside pivot breakout, we're looking for 2 APMDs, so you have that trade vision. So we're looking a failure here. We're targeting this level. So when you're here at the moment and they're holding a metric and they're below averages, to leverage up on an opportunity, putting your stop above price action, looking for even just a double alert distance. Use the metrics and then work it. And here you can see that they break structure. Here you get that little corrective pop into the average and into our price structure. And absolutely, this is a squeeze event, and those happen. But they held the market structure. You don't want to get turned around on the theme. And they broke one structure here, but they didn't break the second structure break, and that's important. If they did, that's a whole different story. And even if they broke this structure, they could still make a new move low, but you'd have a different expectation. And this also holds, this definitely changes our expectation a little bit when they do something like this. But then they come back and they start to get orderly on that bear trend again. And when they fail, they stabilize off the figure. They're coming back into this pocket of averages, coming back into that variance. And so you're looking for this type of confluence. What's your risk reward? Where you can risk above here, you can risk above this variance. You can use, where's the price action aligned with market structure? What's our opportunity? Half APMD, full APMD. But as the market, depending on your size management, what kind of size you have, allowing the market to tell you when to get out, instead of necessarily just putting a straight order in, using an aggressive trail stop. So as the market takes out this low, and we have this high here, ratcheting your trail stop down, ratcheting your trail stop down, using the metrics to ratchet your trail stop down. That's definitely a tactic. And as the market attains the downside target too, that's our objective from a DP breakout. So you're always thinking, 2 APMDs on a breakout, and they attain it here. And then they're holding here. You've got this real aggressive momentum, and you start to break it. It starts to foreshadow, okay, this thing's stalled out, it's over. You're coming into the end of the session anyways. But keeping it simple, price action within market structure in the context of the market state in alignment with the strategy theme. And if the market is performing to expectation, don't think. Is it holding negative price structure? Yes. Is it below? Is it working negative market structure? Yes. Is it working some averages? Yes. Everything's in alignment. And you get that breakout signal. Where can it go? It can go 2 APMDs. And so even here, if you're getting squeezed out and you're all stopped out and you're flat, re-enter here. Your alignment's back. Just don't lose sight of what the strategy theme is, and that'll help. That'll help you to participate in the bigger moves. And if you're fortunate enough to get into here, or you're fortunate enough to get some size off here, stagger your stops. Make sure have something on it potentially, just even just to keep you in alignment with the theme. Where's structure? Where are you wrong? What do you have to risk? And then work it. So this is a strategy-based trading approach, desktop application. We've shown today how you can see the symmetry. So if you've identified a strategy that works in the bull trend, when the R level is below the DP, that's similar to a negative trend when the R level is above the UP. And we can use the same tactics for both the bull and the bear trend. If that aligns with how you like to trade, you can search those out. For more information, please contact us at info@jsservices.com. Look forward to working with you.